Very good morning to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's webinar on auditors communication with those charged with governance. As we all are aware that we have two standards, these are very important. First, SA 260 revised, that is the communication with those charged with governance. And second one is standard on auditing 265, communicating deficiencies in internal control to those charged with governance and management. And both these standards are very important. And in order to tackle these two very important standards, we are having so on behalf of Auditing and Assurance Board, I welcome you, sir, on this webinar. Namaste, sir. I also welcome all the participants of today's webinar. Before we formally start today's webinar, it is my proud privilege to share with all of you the brief profile of the our today's learned speaker, CA Vijay Maniarji. Vijay Maniarji is a fellow member of Institute of Chartered Accountant of India, having over 35 years of professional experience. Earlier, he was from since 1999 till 2021. He was engaged with SR Bartleby and Company, and with the engagement partner for statutory audit of large listed as well as unlisted corporates, Indian multinational entrepreneurs, PE funded, including those which undertook capital market transactions. Relating to the sector focus retail, pharma and chemical, packaging, hospitality, manufacturing, and real estate. And he was taking care extensive audit committee board meetings, experience having attended more than 400 board meetings of the audit. He was a special invitee on Accounting Standard Board of Institute of Chartered Accountant for continuous 2 years. He is a member of Accounting and Auditing Committee of Bombay Chartered Accountant Society, BCAS, since more than 15 years. He is a regular speaker on various auditing topics at various forums, as well as he has given his precious time in various organizing various virtual seminars, virtual webinars, virtual CP meetings during COVID time as well as time to time. He's the co-author of Guided Notes on Division 1, 2, and 3 of Revised Schedule 3 to the Companies Act 2013, issued by Institute of Chartered Accountant. Guidance Notes on Revised Schedule 6 to the Companies Act 1956, issued by ICI. And Mandatory Accounting Standards Extract from Public Accounts, issued by BICAS. Since 1985 to 1999, he has set up professional practice and created infrastructure with Maniar and Maniar Chandrakant Mehta and Associates. He was engaged with the entrepreneur as a trusted advisor and sounding board and developed and mentored team to grow with under his leadership. Since January 2022 till present, he is associated with ASA and Associates, the top 10 accounting and consulting firm of India. He's looking after he's advisor and mentor to guide the Mumbai branch operations and teams, including the leadership team, to strengthen the practice. So still list is very vast. So without wasting much more time, I request our today's learned speaker, CA Vijay Maniaji, to please enlighten all of us on various intricacies of both these standards. Over to Vijay, sir, please.
Thank you, Anilji, for your kind words of appreciation. And thank you for giving me this opportunity to share my views on very important, auditing standard. All the auditing standards are important, so I'm not, but this is a special one, and I'll explain, while discussing why this is one of the very special, because here we are interacting with those charged with governance. And those interactions are always value accretive, both for us as well as, to them. It is very important that how do we communicate with them. There are quite a few mandatory communications which are required, but also we can add value. And, I will run through, some of them. Since, these standards have been there for many years, I'm assuming, all the participants are aware of it, read them. And otherwise, it appears to be a very, dull, because, it's very descriptive, those auditing standards. So what I've tried to do in my small presentation is try to include my experiences, my learnings, my things which had worked well, which had not worked well, my mistakes, and what corrective action, and what worked. Ultimately I would say, okay, what has worked for me, it depends on individual to individual. But what I'm saying is I've tried to cover it, and kept it as my experience of sharing discussions with those charged with governance, and taking clue from what is there in the standard, and that is how I've made my this small presentation. Let me share my screen. Is my screen visible?
Yes, sir. Yes, sir.
Okay. Okay. So, so there are two, standards which I'm taking. First is 265R. So both the standards are communication with those charged with governance. There is some overlap, and I'll explain the overlap as we go. But idea is that, what is the communication with those charged with governance? And 265 specifically deals with those charged with governance as well as management in case of any deficiencies or observations in internal control. So I'll deal with it, but I'm saying overall it's both charged with governance. There could be some overlap in my presentation, but bear with me as for that. First of all, this standard is applicable for audits of financial statements for the period beginning on or after April 1, 2017. So this is 260R, which is which is umbrella, if I were to say, because this internal control, the second standard technically it does not fall technically, but otherwise it falls under this standard. What is the objective of this standard? So let's look at some of the technical aspect. It is to communicate what is our responsibility as auditor, because those charged with governance may not be aware of what is our responsibility as an auditor in relation to the financial statement, because they are not the auditors. They are in charge of the governance and the financial reporting process. So what is our responsibility? What is our planned scope and timing of audit? Also, obtain information from them. We obtain information from them in terms of the entity level controls, if there are any transactions, which has happened, if there are any developments which are pertaining to the audit, if there is any particular, event which has occurred. Correct. So we also obtain from them. So it's a two-way traffic. It's not a one-way traffic. So it's a two-way traffic where we also obtain information from them. It is also, we need to be mindful that it is our responsibility to report. It is also responsibility of those charged with governance to ensure that the proper reporting is done. So it is also helping, this interaction is not only helping us, but it is also helping them in fulfilling their responsibilities. The next is it has to be on a timely basis, and I will also deal with it on what is timely basis. And this will, this is a auditor auditee, or this relationship. So it has to promote two-way communication between us. I'm considering myself as an auditor, though I am also on the board. So it is also I'm those charged with governance, but I'm considering as an auditor between us and those charged with governance. The first question arises, and this is where the first issue is this applicable only to listed companies? Because we've been hearing about those charged with governance, audit committee, independent directors. So first of all, let us understand who are those charged with governance. The people who are given responsibility for the strategic directions, governance, accountability. These are the people who are, in a sense, we say they are the people who are responsible for the governance, and that is where they are the people, who with whom we interact during the course of this communication. So that with whom do we communicate? Correct. And that is where my question is whether it is applicable only to listed, or there are mandatory audit committees, so public interest entities. And the answer is no. So it is applicable for each and every audit of financial statements. The degree of communication, the manner of communication, and lot of things will be different. But those charged with governance, that means it is applicable for the audit of financial statements, whether it is a listed company, unlisted company, any other enterprise, not for profit organizations, partnership, proprietorship, LLP, AOP. So I'm saying it is applicable for the audit of financial statements. So it is applicable. The degree may vary, but this communication and the objective is applicable. So please be mindful that even if you are not auditing any listed companies, then also it is applicable. And why do I say so? Because a lot of times the proprietary audit, if we are doing, then it's a owner. Owner is also the manager, correct, or the management. However, owner is also responsible for providing strategic direction, accountability, governance. So owner, manager. Audit committee, of course, we know it's a independent, but a lot of times, there is no clarity. Also, if you are doing audit of, say, any partnership or a LLP, technically all the partners are responsible for the governance and the accountability, right? However, the interaction will not be with all, because somebody will be responsible for drawing the financial statements, compliance with the accounting standards, and so on and so forth. And hence, the interaction would be primarily with them. However, those charged with governance could be, say, all the partners, or there could be some committee of partners which they would have said. So, what I'm saying, if say for not for profit, it is very difficult for a lot of times not for profit organization who are the people with whom we should interact. If there is no clarity, we should have that clarity. In companies audit, or if there are audit committees, that clarity is there. But non-corporates, please have that clarity as to who are the people who are charged with responsible for the governance, and we should have those interactions. As I said, probably in a family-owned company also it becomes difficult if there are any major members of the family who are involved, right? Or as I said, not-for-profit organization, large organization, it becomes difficult. So let's please plan and have this clarity. And as I said in my, initially, is why this quality of interaction is important, right? Who are we? If I were to say, we are auditor, right? So we are expert. We are expert in, accounting, auditing. Those charged with governance are also successful people. They are also responsible for their business. They've also grown their business. They have also varied experiences. They have a large network. What we bring on the table is the hard skills of, accounting, auditing, and other things, areas which we look at. However, we can also, while interaction, demonstrate our softer skills. And, it's for us to grow professionally, because as I said, I'm looking from my experience. I've grown professionally by interactions with those charged with governance, because they are expert in their field. They are successful in that field, and we have to learn from them. But how we communicate, so how we bring on the table, not only harder skills, but the softer skills. We become their trusted advisors. They will recommend, us for their other, business colleagues should the need arises. They are comfortable with us in, sharing areas over and above the audit, right? And if they grow, they will ensure that, we also grow with them. And hence, these interactions, don't take it, lightly. Don't consider it as mandatory, only mandatory interactions. Look at it as how do you grow with them? How, in case of say corporates or there are formal audit committees, this is opening door to the board. Those interactions, whether mandatory and how do we convert those mandatory communications into professional opportunities is up to us. How do we rise as an auditor? How do we rise and as the member of the Institute of Chartered Accountants of India? It is up to us. The door is open, and door has opened through this auditing standards. And hence it is very important, and I'll reinforce this during the discussion, but please, please, please be mindful, is all interactions, plan well your interactions, no loose talks. Harder skills, as I said, even the softer skills, listening skills, communication skills, body language, all these are very, very important for us. Observe them. They are, successful people. Observe them. How do they react? It's not that you change your view, but the idea is how do you grow professional? How do you communicate your views? So harder skills of technical skills, but the communication skills and all other skills come into play. And if you combine the two, that will help us in, growing professionally. So please be mindful. And that's where this standard is, according to me, one of the most important standard for us to grow professionally. Coming to, some of the areas which, we communicate. So one is the scope of audit. And I'll tell you, during the course, what, do's and don'ts. As I said, this is purely my experience. Others' experience may be different, but I'm saying, so we communicate scope of audit. But a lot of times I've seen is, auditor communicates scope of audit and the detailing which is there. Now, in a lot of times we get limited, time with those charged with governance. The idea is that how do we maximum, utilize this interaction in the communication to demonstrate our expertise and also learn from them. The scope of audit, we should say, people understand what is the audit, what is full scope audit, what is limited review, what is condensed financial statements. It has to be few lines, but documented as, it can go as a part of documentation. The manner of communication, as I said, if it is a mandatory communication with the formal audit committee, the communication would be more formal, more written. If it is not for, audit committee, formal audit committee is not there, then it can be less formal. So please evaluate who is the client and what can be mandatory, what can be, not mandatory, but the communication has to happen. Confirmation of independence. We confirm based on the statute. So institute or the statute with the company or the entity is governed. The next is planned scope and timing of audit and views of those charged with governance. Right. It is very important to take their views because it is a collective responsibility, right? Of their responsibility of the governance and our responsibility as an auditor. So please take their views. Mind you, ultimately, it is our responsibility to issue an opinion. We can consider the views of those charged with governance. However, what we feel appropriate, at least that we should do. So we cannot document saying that this is what those charged with governance. So say audit committee member communicated and hence the audit strategy nature, timing, and extent of audit procedure is all our responsibility. It's all our this. Technically, I always say what we have is those 2-page paper which says audit opinion. That is the area which is completely under our control. Financial statements, providing information, data, timely basis, everything is else is with the management. So don't get biased by, lot of times, those charged with governance may pressurize one way or the other. Please don't get biased. Take their views, learn from them, but ultimately it is our responsibility. So idea is that, what are the significant risks, including the fraud risk, which we have identified for the purpose of doing this audit, and how do we plan to address? And this risk may be because of the nature of business, or it may be because of the circumstances. So, for example, if the company has say have a new ERP system, right, and it is not stabilized, it's a significant risk. How do we address that? Are those controls around this were functioning throughout the year or part of the year? Part of the year, how do you deal with it, right? Or if it is something which is a nature of business, which is a fraud risk, how do we address? So revenue recognition, for example, is always considered as a fraud risk. How are we going to, address, this risk? Please take the view of this. If those charged with governance also believe something is of a risk, categorization is up to us, but please take into account, because they may have some concern. They are doing more closer, looking at the company more closely than us. So take their views, on them. Then, if we have assessed some risk as higher, and we'll deal with it later, is how do we address? And this can be part of the mandatory communication. The next is application of materiality. Now, financial statements are, audited based on materiality, right? It is that, users of the financial statements, it is expected that they understand the financial statements. They understand that audit is done based on the materiality. They understand that there is, for drawing financials, there are estimates which are done. Auditor only looks at the reasonableness, the actual outcome may be different. So on and so forth. But there is a materiality. Now, I'm not sure, my experience, materiality should be communicated or not communicated. Because many times if we communicate the materiality, then something which is below materiality, which can be, the material, which we can become material in the future years, right? The management, or those, they will come back to say that this is not material this year, but next year it may become material. So it becomes an area of friction, or something which is, if we communicate what is our materiality, somebody, want to play around with saying that this is below material. So materiality is also very subjective. In certain areas, we don't look at materiality, even if for audit we look at materiality. For example, related party transactions, right? Or compliance with laws and regulations. But those charged with governance may not appreciate, and it could be an area of friction, and hence please take a call as to how you want to communicate. The next is planned use of experts. By and large, those charged with governance are looking for the timely sign off on the financial statements plus few other areas. But if there is something which is very area where we as an auditor is not an expert, and we will use the expert, it is better to put it as a part of communication. We need not stress it. So, for example, company has significant investment in unlisted securities, and there is a possibility of, say, impairment. How are we going to deal with it? Or there is a large litigation which is there. How are we going to deal with it? So, on a case-to-case basis, please decide how do you want to communicate. If it is a company where key audit matters is required to be reported, it will be better. It is, one should say in the planning meeting that this based on our understanding, of these areas, past experiences, whatever preliminary procedures we have done. These are the preliminary areas of key audit matters. Key audit matters, as my experience has gone the whole swing, uh, from initial period when it was, it came into effect. Uh, Everybody, because we said, if we report something as key audit matters, and there was a resistance from those charged with governance, is why are we reporting? Because they were under the impression that, we are trying to report something which is a non-standard or modifying the report. When you explain to them, they said, and then they say that, okay, now it is your responsibility. To the cycle where they've realized that their responsibility is also getting covered by, if we report something as key audit matter. And if we put more items, so earlier, if we were to put more items as key audit matters, there was a resistance. To now, they would prefer to have more items, because we as an auditor take the responsibility, because we say why it is important, what auditing procedures which has been done. And for the financial reporting, it is also their responsibility. And hence, I'm saying the full this, but it is always better to have this communication. If we are having use of internal auditors now with SA 610, please ensure the compliance. But if we are using a plan to use the work of internal auditor, that is a mandatory communication which is required to be given to those charged with governance. Division of responsibility between joint auditors. Normally, so it is to be communicated to those charged with governance, so that there is no conflict. This normally there is no comment, but there are sometimes when there is a comment. So please be mindful. Otherwise, there is no challenge. Is this? We also communicate the timing from planning to sign off, and how are we, what are the milestones, and how are we going to achieve those milestones. So like, if we were to say that this is how we will do the interim procedures, we'll have those discussions with the management. So I'm telling, mainly from a large complex or say listed companies, the planning procedures would start right for, say, for example, we are in March, so the previous October or November, correct, the preliminary procedures. And normally, it is a good practice to put before the audit committee in, say, Q2 audit committee, which will be sometimes in October, up to 14th of May, to say that, this is what we are proposing to do. So the timing plays an important role, because audit starts from, say, October, November, December, and it runs through, say, April, May. 30th May may be the last day. So how are we going to do preliminary? What kind of discussions we are going to have? What are the planned discussions with the management? What is the management? So one pie chart of the timing may also be given. If there are any areas of concern, so for example, based on the past experience, or based on any interactions with the management, if there are any areas of concern, please put it. Have those discussions with those charged with governance, because if they intervene, it is easier to address those concerns. We are well in time for informing them, to say these are our concerns and this is our solution, or this is in our view how it would be, how it can be addressed. Now, impact of any information or news. Please have somebody in the team doing the search on what is the news item. Anything, so there could be many things, many areas, but any areas which could impact the nature, timing, and extent of auditing procedures. Please be mindful. And if so, for example, there has been some negative news about the company, which impacts the financial statements. Please have that discussion with them. This is the news? What is their view? Is the news the correct news, or something is in the offing, or whatever I'm saying? Have their views, and accordingly, this can determine the nature, timing, and extent of our auditing procedures. Lot of times, there I've seen this. There could be fraud or irregularities, but it may not be communicated on a timely basis. It's not that it's not communicated, but timely basis. The idea is that how do we plan? So please have that confirmation from them, saying that we are not aware of it, or we are aware of this irregularities. Are you aware of anything else? Because if there are any irregularities on any areas, mind you, our nature, timing, and extent of auditing procedures undergo a change. So, for example, if there is a irregularities in, say, payroll processing, we'll do more processes, right? The nature of the extent of process will auditing procedure will change. The nature, because we'll be more skeptical. The nature will be changed, and the timing will be more closer to the year end. This is not for auditing otherwise, but I'm saying that is where it is important that that we can plan our procedures appropriately. Any matters which were carried forward from last year, and which those charged with governance or management has assured this would be addressed, reinforced. I'm assuming this would be key matters, and hence put it as a discussion that this is what you had committed. What is the status? When are you going to address this? Reasons for resignation of KMPs and senior management. If KMPs or senior management has left, please ask them the reason. Right. If the reason is obvious, that is fine, but at least you may know from the obviously what is the reason, but those charged with governance may have more information. So it is always better to document, ask, because our nature, timing, and extent of auditing procedure undergo change. Let me give you an example. If CFO is gone, correct, is because CFO has done something, then the auditing procedures completely changes. Or CFO has gone for a better prospect. That is well and good. Who is going to, the new CFO? Who is how the information will flow? Whether it will be on a timely basis, whether we'll be able to meet our commitments. A lot of times, from management perspective, it's a giving of information is the end. For us, it's the beginning. And hence, it is important that we get enough time to undertake our auditing procedures. And hence, it is important to understand all this. In this process, we also understand the expectations from those charged with governance. And for the purpose of issuing our opinion, we do all the procedures. And as I said, it is the next is also ultimate responsibility is us, our responsibility. But as a part of audit, if there is any area which those charged with governance wants us to do as an auditor or extension, please have their views, the expectations, so that the nature, again, this is a planning phase, the nature, timing, and extent of auditing procedures can be customized. Also, while communicating, please ensure that there is an element of surprise. Ultimately, if there is no element of surprise, there is a laxity which comes in. The counterparty knows, the auditee knows what kind of procedures. And while we are taking those procedures, undertaking those procedures, they will take a corrective step. And hence, please always have this element of surprise while all the discussions. And last but not the least, these are the minimum thing. I'm not saying about other areas, but please ensure that all the areas which are discussed with those charged with governance, whether in writing or orally, there is a documentation about the work done on those areas. Because a lot of times what I've seen is we communicate something with those charged with governance and we take their view, but we can't take their view at the face value, right? We have to be skeptical. So we have to undertake the auditing procedures to conclude on their comments and views, and hence that documentation is very, very important for all the areas, at least for the planning which we have discussed with them. The next is, this is minimum areas which we do. Then during the course of audit, we may come up with newer areas. So after the planning, what are the areas which which we have addressed and resolved or unresolved? I'm saying all the areas. So first is the planning. Then now I'm coming to areas we have done the audit, right? And we can do discussion in the interim period also. In case of these are all for the large companies. For us, depending on size and the nature of business, the governance style, the the structure of the entity, one can decide as to whether you want to do interim procedures, interim this. But I'm saying this is for the planning. Now the matters which we have addressed. In between, as I said, one is free to do the meetings, and it is good to do the meetings as the good practice. So the next is whether should we communicate all the observations. The idea is no. Please look at the materiality. It is very important because those charged with governance are also interested in material. So do mandatory communication irrespective of materiality. But otherwise, do only those transactions which are material for us during the year or which could have material impact in the subsequent period. So take care of the materiality again, because I've seen a lot of times in the report and not only I'm generally for this, but even for the internal audit, not connected with this, but I'm saying internal audit also, some comments which are there, the impact on the financials, on the numbers, or this is so immaterial or nominal that it creates, as I said, it creates our impression as to what kind of observations which we are bringing on the table. So what could be the significant matters? First of all, those charged with governance are responsible for the financial reporting. So any kind of modified, qualified, non-standard comments in the audit report, including those coming from the component, that is the first item one is to get into discussion. Please, this has been that not only the qualification, but the whole wording of the qualification needs to be put on the table so that there are no surprises. And any item which is likely to be qualified or modified, we should appraise them in the interim period. Even in the planning phase, if we know that these are the likely qualification items or non-modification, or the past year qualification, if it is not addressed, then I think that communication has to happen. So it is not that on the date of signing, when we having a formal meeting, those charged with governance are getting the shock that we are going to modify or qualify our report, and hence communication. But this as a mandatory communication, please put it on this. The next is if we identify any transactions which are not in the normal course of business. So, for example, I get into this some transaction which has been done which is not in the way the company is dealing with, right? Or some year-end transaction, because a lot of times there are compulsions of the management, some incentives, bonuses, correct, or some discussions or expectations of the analyst. I'm saying depending on the stakeholders, management may get into or do some transactions which are not in the ordinary course of business just to meet those expectations. This is a fraud, but I'm saying if we believe that something which is not in the normal course of business, please put it before those charged with governance. Exceptional and extraordinary transactions. If there are any exceptional or extraordinary transactions, a lot of times management would want to put any expenditure which is in the normal course, but something which is not in in the normally which is incurred and would qualify it as and disclose as exception. So please be mindful whether it is exceptional or extraordinary transaction, because that is from an analyst perspective, it's not considered as normal, and the profits and the margins of the company appears to be higher. So please be mindful whether it is a exceptional or extraordinary transaction as an auditor. Whether you agree, then it is fine. Not agree, again discuss with those charged with governance. Business combination, hot topic. That is also how it is accounted, and if it is a company with Ind AS, are we the acquirer, right? The whole technical. So that is a technical side. But what are the challenges which we have found? So if it is too close to the year end, it is possible that we can go ahead with the provisional valuation, right? Or if it is 1 year has passed, then what is the basis of identifying tangible and intangible assets, liabilities, contingent liabilities, how this has been accounted? The whole piece around business combination is the one I've always noticed that its accounting and its implication is the one which is of interest to those charged with governance. So here they would be, and specifically identification of intangible assets, its implication on the amortization, goodwill. Subsequently, it will get into goodwill testing and impairment testing. Any new ERP or accounting system? I've not seen hardly any. I would not say no, but hardly any new ERP installation being very smooth. There would be hiccups initial. If planned well, those hiccups could be addressed. Management is ready. But any new ERP, how this has been addressed? I think very important. How the data migration has happened. What are the controls, IT general controls, application controls, how we have tested, how we are comfortable with the new accounting, these reports coming out of it, trial balance coming out of it. So I think so on and so forth, because the whole way of preparation of financial statements and the underlying trial balance may undergo a change, and it's very important. Any capitalization, I think any significant capitalization which is done, or CWIP which is for a longer period, right? It's not only for Caro reporting, which is from the last year, but even otherwise CWIP and longer period. If there is any concern, any capital advances which is outstanding for longer period, please. And these are all I'm talking about significant matters, right? So don't whichever you feel appropriate as a material item or significant item, or there is a concern, please raise it. If there are any valuation of unlisted securities, complex derivatives, right? ECL model, we'll deal with it. It can come here also. It can come as significant judgments and estimates. But the idea is that what is the basis on which we have concluded there is impairment, or we have concluded there is no impairment. Right? This gets into the judgmental analysis. Complex derivatives could have significant impact on, it can wipe off the whole profit, or it could double the profits. I'm saying it has significant, and specifically in times of changes in the interest rates and forex. Its valuation is very, very evolving. Related party transactions. I remember earlier period, related party transactions were not as vocally discussed with those charged with governance as now. And it starts right from the identification of related parties, and that is the area. But wherever there is a challenge, I think those needs to be discussed, right from identification of related parties to the manner in which those transactions are done, approvals taken, and reporting done. And it please have in all the audits which we do, focus on related party transactions. We do not know the related parties in case of a complex structure. The transactions with related parties are not even reported because those are not identified. Segment disclosures. Now, segment disclosure, say if it is Ind AS company, so chief operating decision maker, and how chief operating decision maker looks at allocation of resources and evaluation of performance. Many times I feel there is a resistance to disclose more because of valid reason is, the competition may look at the numbers, and hence those disclosures are minimized. However, our responsibility is to ensure the compliance with the accounting standard. And I've seen that in the financial statements, disclosures are minimized, but this is say in case of listed companies from the analyst. And those are disclosed either to the analyst community or investors presentation, or somewhere it is mentioned in the annual report, because it is, I've realized that financial statements are prepared by one team. However, the annual report analyst presentation is prepared by another team. And those team, if they don't talk, there is a possibility that we disclose segment disclosure as a minimal because finance team feels that we should not give that information. But the markets team or the investor relationship team would disclose it as more information, which could contradict. And hence, this is important to ensure that there is consistency. As I said, our responsibility is to ensure compliance with the auditing accounting standards and how do we audit them. We are not there to check. We should say check the MIS and say that how chief operating decision maker is doing it. And if there is other information which is disclosed, we should align. That's why there is a contradiction. And both the teams should align with this. Otherwise, it's a matter for discussion, and also it could be matter for the audit opinion. Key audit matters we have discussed. As I said, it's a full circle which was there. The next is reliance on the work of component auditor. If we have relied on, because under SS 600, Indian SS 600, international SS 600 is different, but Indian SS 600, we can rely on the component auditor. So what kind of procedures which we have done as per the regulatory requirement, and the regulators, including SEBI, has come up with quite a guidance around the responsibilities of the principal audit. But I'm saying what reliance we have placed after doing all those procedures that we should bring it out. If we have identified any fraud or irregularities, please bring it up. Correct. And if there is anything for which we have to file this ADT4 form, this gets into a very different level of this. But I'm saying all these fraud irregularities which are identified during the course of audit this has to be discussed with the audit committee or those charged with the audits. Then application of new standard accounting policy changes therein. So if there are new standards which are notified by the regulators, how those has been done, and if there is an accounting policy and if there is a changes in the accounting policy. Now under Ind AS, at least those changes have been minimized because it's the change in the accounting policy is very stringent requirements are there as against our old in India. But if there is any change, the whole impact and the disclosure is something which we have to discuss this with those charged with governance. Very important, if there is any material uncertainty relating to going concern, that has to be discussed with them. Something could be obvious, something could be we have relied on some say confirmation. So for example, the subsidiary company is making losses, we are auditor of the subsidiary company, the parent company has given the guarantee, then it is important that we say that this is based on this guarantee, or that we have considered this as a going concern. Otherwise, say current liabilities exceeds current assets, there are losses, and so on and so forth. Also, if there is any material misstatement in other information, I think that because as I said again, the other information or the annual report, what goes in, it is possible that is prepared by the other team, and the financial statement is prepared by another team. And so, for example, if something for which we have, say for example, there is a potential impairment in any investment, and we have been provided with the valuation report, which is done by the financial reporting team based on value in use. That means the company is going to use this, continue to have this investment and turn around. And based on this DCF method, it is considered that concluded that there is no impairment. However, in other information, there is a reporting that the management or the board may sell this investment. There is a contradiction, right? So accordingly, please run through the other information which is there, and if there are any obvious contradiction, that is a matter to be reported, but discussed with those charged with governance. If there are any significant subsequent event, adjusting or non-adjusting, I think that is something which is required to be, which should be discussed, because it can have impact which has been adjusted. Three things. One is, if it is adjusted, that is well and good, but this is based on subsequent this. If it is adjusting but not adjusted, if it is material, it will impact our audit opinion. It will also get discussed over there. And if it is non-adjusting, then it may have impact in the subsequent period reported, and hence it will be a good practice to this. If there is any revision in audit strategy due to any material changes. So, for example, say change in IT system, right, or IT system not stabilizing. Some business combination done. Say COVID, nature change, extent, and some fire has happened. So I'm saying, if there is any change in our audit strategy, which was planned, but there is materially changed due to some changes at client's place, due to client's action or otherwise, I think that can be brought to the audit committee. uh, accounting entries passed as a result of audit. Very, very important. If during the course of audit we found some errors and those entries are passed, or we do not agree to some provision which the management has made. It can be anything. As an impairment, we feel that impairment should be there. Management believes it should not be there. But based on the discussion management passed, or there is a ECL model, or whatever, what I'm saying is, if there is any entry which is passed, so it is passed, is well and good. It does not impact the audit opinion per se. However, it is should be reported to those charged with governance. And the next one is also very important, that anything which we have not considered as an auditor to be material, however, and ignored. However, we should, take the views of those charged with governance, because it something which is not material for us, it could be material. And let me give you one example. Say there is some bonus or incentive which is tied to that number. So the amount is not material for us, but if it crosses that threshold, which is lower for us, the management may be entitled to some incentives, right? Then it is important for us to take their view. So those charged with governance, because they are the ones who will give bonuses and incentives to the management. And hence it is important that even if we feel it is not material, we should not tiny amounts. I'm saying something which is lower, significantly lower than materiality, but not tiny amounts or immaterial amounts. And the last but not the least, please document all the matters discussed. Right? So, what was the issue? How what was the work done? What is the issue? How it was addressed? Whether it is closed or it has gone into our audit opinion or in the management recommendation. Please evaluate. This depends on facts and circumstances of each item. So what we discussed is, one is planning, with all those charged with governance. The other is what are the items which we came across. This I put it as a separate item. This can also go as a part of items which in the earlier one, because these are significant judgments and estimates, right? And judgments and estimates may change the face of the financial statements, and hence, as auditor, we pay special attention to how those are calculated, reported, correct, identified. And it is, I'm that is why I'm saying this is from quoting a different standard, which is risk of material misstatement, that we have to obtain understanding of the following. We'll see this and assess the risk of material misstatement for accounting estimates. So what are the accounting estimate judgments? Correct. We need to understand. Correct. So first of all, for this, we know that what is the financial reporting framework, and based on which, whether the accounting estimates are made and disclosures are done. How the management has identified those transactions, events, conditions that may give rise for need for accounting. Because, estimates is very generic, right? It is there in when we draw the financial statements, then that means there is estimate. But how do we identify, right? And then how those are measured, and then how those are disclosed. I think that is very important, and it depends on the financial reporting framework. So something which is there in, say, old Indian GAAP, where it is ignored, but in Ind AS that is to be done. If it is something which is there in Ind AS or IFRS, maybe in US GAAP, the way of dealing with it is different. And hence it is important to understand the financial reporting framework. And then whichever, so for example, in Indian GAAP, we do provision for doubtful debts as, say, incurred loss. So that means we look at the data and say that some money is not coming. When, where is the provision which is done? Whereas under Ind AS and we do is expected credit loss, right? So that is the actual credit loss. This is expected. So even if all debtors, there is no existing debtor which is um, uh, uh, which is not which is non-paying. However, we need to estimate, and there is a way of estimating, and there is a whole guidance which is there. So I'm saying, if there is those guidance, we need to understand which is the model. In the earlier one, it is, as I said, actual incurred loss model. This is a expected credit loss model. And if it is something which is a significance, what are the controls? If the management has used expert, evaluate, who is the expert? Is that expert independent in-house? It is possible in-house, that person is not independent, but just evaluate. What are the assumptions which are there? And based on the last year, is that model needs to change because of changes? And what is there any management bias? I think why I'm focusing, this is not the discussion for this, but I'm saying estimates and judgments is very, very important. It can change the way the financial statements look like, and hence it is important. And that's where, I'm emphasizing this. And that's where I'm saying that what are the areas, correct? And think about it in your this. Even here, I would say communicate only material or significant items. As I said, material and significant, maybe from a number perspective, but if it is may not be material in this year, but can be material in the subsequent period, I think please discuss them. And some of the areas where judgments and estimates are there, say goodwill impairment, right? So goodwill impairment, if we have made some acquisition and there is a goodwill, we need to look at and review this. So what is the basis? If it is something, as I said, something which is material, so what is the basis on which we have concluded that there is no impairment? And as I said, if it is an impairment, if there is a disagreement, it will move back to our opinion, whether our opinion is qualified, modified. Emphasis of matter is a different thing. Valuation of unlisted securities, ACL provision, any complex derivatives, correct? Recent, changes in, say, sudden changes in interest rates or forex rates. The valuation of complex derivatives may undergo change, and hence we need to be very closely understanding the basis of those. Exam cost to complete for POCM. So if the company is doing percentage of completion method of revenue recognition, so what is the basis on which percentage of completion is done, whether input method, output method, how it is consistently, applied for the similar kind of contracts, right? And cost to complete is always an estimate. Then we look at the whole process, the controls around it. But I'm saying that could be one of the significant items. Sales return, suppose we have given some, we are in the industry where we sell with a promise to return, take the return. Then what is the nature of industry? What is the contract with the customers? How the sales return? What is our promise? Right? What are the terms and conditions? Will we take this if there are any sales schemes or discount? And that the whole accounting could be very, because remember, revenue recognition is always considered as a fraud risk unless one documents why it is not a fraud risk. And hence, all these items play, POCM or sales returns, sales schemes and discount, all this, if material, is very important for us to, not only understand the basis, the schemes, the nature of transactions, what management has promised, but also be comfortable with the underlying assumptions and put it before those charged with governance. Any dispute with significant debtor, vendor, dispute with significant borrower or long-standing advances. I think this list can go on and go forth. Just pick up any items on the balance sheet, because and one can have significant judgments and estimates. ESOP valuation. Important ESOP valuation, specifically in a people focus where the company is liberal in giving ESOP. How the ESOP Black-Scholes model, and then what are the assumptions and whether we are comfortable with those assumptions. Similarly, retirement benefit assumptions, specifically for people-focused businesses. I think that is important. Here, one thing which I've noticed is the management, say in the past, may have, one of the retirement benefit assumption is salary escalation, right? The management may in the past have given higher salary escalations. However, in the retirement benefit assumptions, those are not. So people don't many times talk. So this is prepared by the financial statements team. However, the increments and everything is decided by somebody else, and the actuary may not look at what has been the history. It is possible, but look at the industry trend. Now, each company is different. Some, our company, our client may have decided to give higher or lower, salary increments, and hence it is important to understand what are the assumptions and go back in the past that what has been the actual. Significant litigation. Excuse me. If there are any significant litigations, whether it is possible, probable, remote, how it has been concluded. I think that is one thing which not only management will do, we also need to do. It is our responsibility to take input from those charged with governance, and their responsibility to also understand that it is evaluated appropriately. Similarly, under over provision, recovery of deferred tax asset. If there is any site which we need to give it back, correct, and is there any decommissioning liabilities at the end? If it is for the longer period, then there could be liabilities. And the last is any disagreement with the management and how addressed. I think disagreement with the management, as I always say, we are not accountants. We do not prepare financial statements. What is in our hand is only 2-page report where we issue opinion. And if there is any disagreement, it is only us. We have those 100% control over those 2-page document. The next is, why this communication is necessary. See, we are the auditor. The company or the entity is an auditee. And those charged with governance is responsible for the governance, accountability, strategic direction, and which includes financial reporting. So it is important that we have that constructive working relationship. We understand each other, right? We understand what is our expectations, what is our responsibilities, what is their responsibilities, what are their expectations. So long as that understanding is there, right? Because a lot of times the questions are asked, why do you asking this information? Why you are asking this information? And hence it is important that there is a clarity as to the minimum is what is the regulatory responsibility, our responsibility and their responsibility. And hence it is important that we develop and maintain that constructive working relationship. Our care should be taken that we are expected and we are supposed to be independent. So we should not become that close with those charged with governance. Strong relationship is good, but it has to be, working relationship so that our independence is impaired, and hence this is very important. We've discussed, we obtain during the course of communication, we also take their views, we take information from them. If we are not able to get this, they will also guide us. Why don't you look at take information from this person if you are not getting, or why don't you look at it this way? So I'm saying they also give us their viewpoint on various areas, entity level controls, and event transactions, why they did what they did. Communication, as I said, they also have responsibility for over this. The issue, and which is where I want to discuss is, if our lot of times our first point of contact is the management, and management may say that we have discussed this matter with those charged with governance. Is our responsibility over if management communicates that we have discussed with those charged with governance? Correct. The answer is no. The level or the detailing of communication may be different. However, it is wherever is our mandatory responsibility, it has to be communicated. Whatever is the expectations from those charged with governance, and it can be done as an auditor, it has to be communicated by us. So, so management also needs to communicate, because we are happy to communicate, but I'm saying it is both parties needs to communicate with those charged with governance. And a lot of times it happens that, and this is not frankly my experience, but if both management and those charged with governance, if they are hand in hand, and there is some we are not comfortable with, I think that time we do not document, and we do consultation internally. We can discuss with outsiders, experts, lawyers. But the idea is that if we find that both are hand in glove, and we will not be able to fulfill our responsibilities as an auditor, and hence then it's a different dimension which is not envisaged in the standard. But I think we can take a legal help. As I said, we can do consultation, talk to experts, talk to other senior auditors, and take their views. So these are the many mandatory communications, as I said, but there is other communication. And as I said, we need to demonstrate that we are expert. We are also ahead of times. We are, so many changes which are coming. So couple of areas which I thought and which has helped me in developing and strengthening the relationship with the audit committee is management letter. Now, management letter is expected, but I'm saying it is not a mandate communication. So management letter, the quality of management letter, the manner in which it is presented is something which can be done. It's a good practice to do it. The issue is that look at materiality, look at what is the management. Don't just issue and discuss those with them. The management view is very important, and evaluate, based on the importance. And if it is a key recommendation, can be discussed with those charged with governance. The practice is to issue management letter, which goes to those charged with governance, but the auditor discusses key recommendations out of it. If there are any regulatory changes which are impacting the entity and or those charged with governance, I think that can be discussed with them. Changes in reporting requirement, which is our responsibility. If it is there, that should be discussed. We should, because our nature, timing, extent of auditing procedure may undergo change. Right. So hence it is important to have this open dialogue with them, something which impacts them. And this is where we will also be looking at it, but something which impacts us as the auditor and how we will be looking at it. And if there are something which is a new development, new accounting standard, disclosure requirement, we can discuss the readiness, right? Because a lot of times those changes are so far reaching. Somebody from the management needs to understand what are the changes, needs to understand the implications on the company, what needs to be changed, and how the things which are going to be looked at is different. So the idea is that if there is something which we feel something material, I think all those areas, and this is, as I said, it is other communication and not only this. This area, one more area is significant difficulties encountered. So, a lot of times we do not get information on a timely basis, right? That is something which we should discuss, and hence that timeline chart becomes very important. The documentation of the trail, it depends on client, their expectations, the alignment. It's nothing is, uh, uh, as I said, mandatory. Or there is no formats, but I'm saying if there is a delay, please raise your hand as early as possible. Have that communication protocol aligned with those charged with governance. If it is unrealistic expectations and timeline, a lot of times management either will not provide information or provide information but set unrealistic timeline because there is a delay on their side. Please be mindful. Our job is to do, responsibilities to do quality audit. If it is unrealistic expectation in timeline, please raise your hand. Have those discussions with those charged with governance. If you don't get any information, not only timely, but it is not possible for some reason, it is a scope limitation. Management may have their concern. Management may be this, but our responsibility is not going down because of any of the constraint of the management. And hence, even to that extent, even in COVID, none of our responsibilities have gone down. There has been a lot of guidance from accounting regulators across all. Even if you see whatever institute is also given the guidance during COVID, all this has been there in the auditing standard. There is no, all these guidances have explained how it can be done. However, our responsibility has not gone down. Any restrictions imposed, lot of times, management challenges, why are you asking this information and that information? We should, if we feel that any information is relevant for the purpose of our, this as auditor and financial reporting responsibility, I think that we should be very clear and that it is a must. Yes, this has been my experience. Unwillingness to make going concern assessment. Now, going concern assessment, whatever is the changes in the reporting requirement which has come as our, last year from Secaro. But it is first is the responsibility of the management to do going concern assessment. And management may not be willing to do that. Ultimately, it is, they have to determine. If they are not willing to do it, we cannot prepare the basis of their going concern unless in a very company is a very robust and healthy financial state balance sheet. And last but not the least, consider the impact of all communication on audit opinion. Now, this is one area which I want you to be really careful and mindful, because as a process, we communicate a lot of things. A lot of areas are written communication. Now, those written communication could be in contradiction with our audit opinion. So, for example, we give issue kind of management letter and recommendation, which ultimately is saying that, though this is a recommendation, but our audit opinion is a clean audit opinion. Or that, if there is a management, and this is a lot of you would have experienced, we need to issue opinion on ICFR, internal control, and this is what we'll discuss in the next standard. However, we make a recommendation that the management is making so many errors, or all the entries which has been passed, or that financial statement preparation, there are some 30 versions and we had to check 30 versions, and that is what we give as a management letter, because you have this control. But we don't have that comment in internal control over financial report. Now that is a contradiction. So what I'm saying is, please be mindful as to whatever communication is our audit opinion, because ultimately our responsibility is to stand by our audit opinion, and hence any observations, comments, communication with those charged with governance, specifically the written one, is not in contradiction with the audit opinion. Some good to communicate this. It's a catch-22. So something which is mandatory, but I'm saying something which is good to document. And let me give you some example, as I said. So in this case, there was some transaction which the company did, and it was authorized transaction, right? Some kind of derivative which I think the subsidiary took, and the subsidiary made the profit, and all this was accounted. When you discuss this with the HO, they said, well and good, but this is against our policy, right? So I'm saying this can be good to understand. Though accounting, it is authorized by the subsidiary, but if it is against that entity's policy or the group policy, please be mindful. It's a good to communicate. Make sure that there is no ICFR qualification on this, but otherwise, as I said, for new line of business, new customer, vendor, employee, lot of times, we deal with other clients. We meet different people. People may have different experiences in some business or some territory, or some customer or vendor or employee, some very bad experience of some of our other clients. Evaluate how you want to communicate, if you want to communicate, because that is beyond the scope. It is good to communicate, as I said, and that is where one has to be mindful. And hence, there are a lot of matters which are outside the financial statements report or our responsibility as an auditor. And it is good to this, because those charged with governance also look upon us as an expert to understand what others are doing, to give their views, understand their expectations, evaluate that it's not must observation, evaluate whether you want to communicate, evaluate how you want to communicate, correct? And if it is to be communicated in a way, please say that it may not be complete, because not all, say for a customer, vendor, employee, you are certifying, correct? Or all line of business or territory you are saying. You are just sharing some experiences, and hence it is important to first see how you want to communicate, if you want to communicate, and then say how you want to communicate. Communication protocol, please have that communication. It's very important to have the communication protocol set at the beginning of the engagement and beginning of starting the relationship. Most important is no last moment surprises, and hence this open line of communication or access to those charged with governance is very important. They may agree with our viewpoint, but if it is at last moment, it creates an irritant. As I said, we need to do what is right as an auditor, but we should ensure that there is no last moment surprise. And hence communication protocol, if there are any red flags, we should flag it off as early as possible, and not on the date of audit committee or the sign off. If any significant matter is raised and there is a promise from the management, but we have not received, we should raise it again. don't feel shy about it, right? Because it can, if we don't raise it again, it can be presumed that we don't, that the information which is provided has been provided and which has been accepted. Written versus oral, as I've said, depends on so and so two-way communication. Uh, Anything with those charged with governance, I think it is important that we discuss with the management first, because ultimately those charged with governance will go back to the management, and we should align with the management that we agree or disagree on factual aspect of the observation. There should not be contradiction. So please be mindful, because it will smoothen uh, uh, the relationship and the whole communication process. Unless if we feel that communicating with the management is not appropriate, because management is either doing something which is we are not comfortable, inappropriate, some fraudulent transactions. So unless we are not comfortable, we should have agreement or disagreement, but factually we should align with the management. Evaluate. Now, during the course of the engagement, we will have enough, interactions with those charged with governance. And, if I were to say good audit committee, this is, audit committee, we have, approaches us, the chairman approaches us as auditor, audit committee, other members, correct? We participate in those audit committees. So I'm saying, look at the way the communication happens, whether it is adequate or otherwise. But if it is, say, inadequate, we can't change, right? We have to revisit our risk assessment and audit strategy, because one of the very fundamental way of auditing is enterprise entity level control. And if entity level control fails, our audit strategy may undergo a change. So we need to do more audit. Nature of procedures will be changed. Timing will be throughout the year, and extent will be more than the normal. I'm saying entity level control fails. Then what happens? Our whole effort estimate will undergo change. Something which is mandatory, then we may have to modify the opinion, right? Or withdraw. I think recently I saw some resignation where auditors have resigned because there was no communication from the management or those charged with governance. And if it is not possible, take a legal advice. So as I said, those communication with those charged with governance is very, very important. The next is limited to communicating deficiencies in internal control to those charged with governance and management. Now, this is effective from, 20 to 23 years back. So it is from April 1 to 2020. And it deals with our responsibility of communicating with those charged with governance and management. It deals with both. The earlier one was only with those charged with governance, and internal control deficiencies is both those charged with governance and management. And we'll run through it. How do we differentiate? But it deals with only those deficiencies identified, not while expressing opinion on the effectiveness of internal control. So now, for example, our entity is a corporate entity and we have to issue opinion. We have to report on whether the company has adequate internal financial control system in place and operating effectiveness of such control, right? That piece, if we are going, it is outside the scope. So as I said, corporates, this is outside the corporate, but if we are auditing, say, any partnership form, LLPs, not-for-profit, AOPs, trust, I think this is where this comes into play. So here the idea is, what is our objective? And I just want to say where it fits in. So I'm saying what is our whole objective is to obtain reasonable assurance whether the financial statements are free from material misstatement, whether due to fraud and error. And we take help of all the essays. And in that process, we evaluate what are the internal controls which are instituted. So this is our objective, correct? And if I were to, why I've given is this was to be discussed because each level, those charged with governance comes into play. Entity environment, entity internal controls, correct? Risk of material misstatement, assertion level. So all the level, this is there. But this piece, this standard 265 is our response. So when the company and the management has instituted those controls and those controls fail. Now, what are these? And let me give you some examples to, run you through this. So what is our audit risk? Our audit risk is, say, inherent risk first. What is inherent risk? Inherent risk is something which is inherent in the business, right? So, for example, the company is taking, say, complex derivatives, correct? It is inherent that those valuations will come into play, right? Or if, say, company is dealing in cash, so for example, say retail outlets, they will collect only cash. They will have all modes of payment, but say cash. Now, cash by nature is, it can be misappropriated because somebody is dealing with cash. The idea is that any of this, or for example, a company has new ERP, right? How that inherent risk that there would be challenges, how those are impacting the accounts. So management will have some kind of process and controls to ensure that financial statements are free from material misstatement. This control risk is the one which is instituted by the management, and that is the one which we test. So inherent risk is inherent in the business. The control risk is the risk, the control which the entity has put in place. And if there is a failure of this, that is where the communication has to go under this standard. The idea is, this is the crux of the discussion, is if there is a internal control. So audit risk, I'm repeating, is the composition of inherent risk, which is inherent in the business at the account level, correct? There is a control risk. The management has instituted that control so that to address that inherent risk. And the last is the detection risk, because we are not able to, we may fail to identify that risk. So it is failure on our part as an auditor. Here the focus area is on control. So if there is a control risk, then if there is an internal control which is instituted or not instituted, and that is failed, and that is what needs to be communicated. So what happens? We design our, nature, timing, and extent of auditing procedure as a composition of something which is inherent. Then the management has instituted control. And combination of the two, we decide what should be our nature, timing, and extent of auditing procedure. And if there is a failure, what is the key feature of the standard? Lot of things are there in 260R. As I said, here the main is it can be discussed with both those charged with governance as well as management. Something can be discussed with management, something can be discussed with those charged with governance, something can be discussed in combination. So first of all, what I'm saying is discuss with appropriate level of management. We discuss that also, agree or to disagree, but use discretion. That also we discuss. If there are any irregularities with the management which we are not comfortable with, use that discretion. Report even if there is likelihood of misstatement, irrespective of correct if we feel that there is a likelihood of mistake, irrespective of it actually occurred. If it is something material, please discuss. So something which is, say, there is no maker chapter, for example, which is there in preparation of bank reconciliation statement. And we identified, however, there is no error which we found when somebody is making that, preparing the bank reconciliation. However, please, so irrespective of preparer is making mistake or not, so I'm saying irrespective of actually error happening, please discuss. The next is focus on key controls. What should be discussed, right? Focus on key controls. Focus on controls over prevention and detection of fraud. Very, very important. Whether, as I said, whether this has happened or not, but has any of those controls failed? Or selection and application of accounting policy. For example, we saw this in construction contract POCM. If there is some, all these are estimates, right? POCM means if I were to increase my profit, company were to increase the profit, cost to complete may get reduced, or and vice versa. So it's a wrong application of accounting policy. Please look at transaction with related parties in identification, in the process, in reporting. Right? It's a very, very fundamental transaction. I'm saying certain things, please be mindful and focus on it, even if those has not occurred. Revenue recognition, transactions with related parties, journal entries. Right? Focus on those areas irrespective of your past experience. Transactions outside normal course of business, we discussed earlier. Period and reporting process. Right? What kind of disclosures which are done? Journal entries, because ultimately at the period end we pass journal entries. Company passes journal entries. If the company does not have proper risk assessment process, or those risk assessment process, because risk is ever changing, but financial statements, so the management may be addressing this in the operations, but financial statement level, lot of times I've noticed that does not take the precedence. Finance team may not be aware of the kind of transactions and its implications on the financial statement. Something, say, for example, which is off balance sheet. And hence, the whole risk process. The next is misstatement detected by something management has that process. We have detected. But even if the management entity has those controls, prevent controls, detect controls, neither they were prevented, nor detected, nor corrected. Any of this, I think that is something which can be discussed. Fraud or error of prior period detected. I think this is one area we need to be careful. This could have implications on ICFR reporting also if it is something material. But I'm saying that means the control failed. Evaluate whether what should be written, what should be oral. And certain discussion can also have with the management. As I said, have all discussions with the management unless you are not comfortable. But certain areas can be discussed only with the management, and they will agree to this, rectify or put in place. And certain controls will have to be discussed with those charged with governance, key controls, fraud-related controls, right? But have alignment with management as far as possible. And if previously communicated significant deficiencies not remediated, please discuss them. If because there is always a time lag, management will agree to certain time lag, but if those are significant deficiencies not corrected, not remediated, have discussion with them. So that's it. From my side, it was a monologue from one side, but hope I've been able to share my experience and add value on this dull topic. Thank you.
Yes, sir. Thank you so much, sir. Thank you so much for sharing your knowledge as well as experience relating to these two standards. Members have gained a lot through your deliberation, and uh, uh, most of the questions, instead of questions, only the appreciation is there. Sir, very good presentation, very good presentation. And initial questions, many members have queries relating to the initial time of your presentation, but those were solved at the later half when you have presented, and though you have covered their queries. And still 2 3 members right now pop up, 2 3 queries are there. Again, members are asking, can sir elaborate a difference between management and those charged with governance, and who are those, again, if you can give a gist, who are covered as those charged with governance, means basically difference between the management and those charged with governance.
So management is somebody who is who, so those charged with governance are what they are. Think about it in a corporate world, the board of directors, or say board of trustees, or partners in a partnership form. So those are the ones who are correct. Now those people, those would can also wear the hat of management, right? So somebody, in case of say partnership, in corporate world, it's easy that executive, non-executive, independent, non-independent, right? But in case of say partnership, it will be to explain, if it is a family owned, and there would be different family members taking charge of different areas. Somebody is there to provide the guidance, but everybody is there to ensure there is a proper governance and accountability. So one may have been discussing with somebody who is responsible for accounting and finance function, but those charged with governance can be everyone. And there is a lack of clarity around, as I said, corporate and non-corporate. Corporate, there is a clarity. Audit committee members are those charged with governance. But in non-corporate, it is important that we identify people who are in charge of governance. And if there is no clarity, in case of family or in case of say not for profit, the trustees, there could be somebody else, and hence having that clarity is very important when we commence this engagement. So it is in case sole proprietor, as well as is the owner as well as the manager, and they is the one who is, I would say, those charged with governance, and hence the communication need not be independent, because as an manager, we are already communicating with them. So as owner, we need not duplicate. The idea is that how do we ensure that those charged with governance are updated, and then the manner is oral or written.
Similarly, sir, in case of we talk about the management, that means we talk about the hierarchy. If we talk about in hierarchy, one is the policy maker and another one is the policy implementer. So both makers as well as those who implement, both comes under those charged with governance, or only the implementation part is covered under the those charged with governance.
No, those implementation may or may not be there.
Yeah.
Those who provide direction would definitely.
Yes, sir.
Because that will depend case to case basis.
Case to case.
Because somebody say on the board who is the implementer will also be responsible for governance. That is why this is a normal. People feel that this is applicable only to corporate world. This is applicable to all audits.
Yes, sir. Sir, generally, one person is designated to coordinate with the auditor very closely. Means the second hand of the auditor. That does communicating with him to exclusion of others, or would also it is a part of those charged with governance.
So if he's the owner, right, then he is also in charge of governance. But there are other partners or other directors, then they are also in charge of governance and accountability. So the level of communication and it is the responsibility of that in charge of finance and accounts to communicate to other, say, directors and partners. But that does not, reduce our responsibility. Our responsibility is also to communicate with those charged with so other partners as well as this. In fact, I've seen a lot of times there is no interaction, and that is where this standard is a mandatory standard where we should have interactions with others who are responsible for governance.
Sir, one another query. What if the scope and expectation was not cleared by the client at the beginning, or there was miscommunication between client and the auditor, leading to increase in work completion time? So, what should be done in that case?
See, the scope is so there are two things. One is whether the scope is decided by the regulation. So if it is a true and fair opinion, for example, right, then the scope is decided. It is scope cannot be, we have to communicate this is the scope. So whether it is a full scope audit, limited review, interim financial statements, condensed, full, SEBI results, I'm saying scope is decided. If it is non-mandatory, but true and fair view, then the auditing standard takes into account. So it's a way we communicate to them and say way we explain to them. But if there is any expectations from them, which is not clear, I think that is where we go back to them. But by and large, the scope is decided by the by us as to what will be the scope. Means if the client needs audit and which is not mandated audit, what should be the scope with that we should discuss it. Otherwise, it's by the regulation.
Yes, yes. Sir, one member is saying in his partnership form, allotted statutory audit of CAG of India. Firm does not keep all audit papers, audit papers, and other relating material. An audit done by 3 partners every year. An audit report is signed by 4th partner. No audit papers are kept by the head office when the person who is doing the audit and along with his partner draw attention of all the partners. Then partners were not willing to give all such of information. So what should do in that particular case?
Sorry, I missed it. So who is the client? CAG.
Yes, statutory audit of CAG.
Statutory audit is of CAG,
yes,
right?
Sir.
And who is executing?
Sir, 2 or 3 partners are executing the audit.
And they don't keep any work papers.
Yes, no working paper, no record of working papers.
But that's a big risk, no? Because if something goes wrong, correct. So number one, our document should speak for itself. The level of documentation is that if there is an expert auditor, without the presence of the executing team, will come to the same conclusion based on the reading of the documentation. So if we have signed the opinion, but anybody else without the presence of the executing team will come to the same conclusion, here it's straight getting challenged. So I think the firm is running a big risk, and God forbid, but something goes wrong. It's all everything becomes illegal. So the regulator will look at comma full stop of the working paper, but a working paper is not there. It's a big risk.
Yes. Sir, as we all are aware, a member is saying NAFRA coming into existence with the responsibility of auditors have become manifold for frauds like so many recent examples. So what additional safeguards need to be taken by auditors to make them safe? If you could kindly elaborate.
So I think first is what I've seen, first of all is the documentation, because we don't document. And I always say that we roll up our sleeve when there is some accounting issue which is there. But that accounting issue, how addressed? Correct. So that's a solely providing solution to the client, but how accounting was addressed by way of documentation in auditing, we don't focus on this. And we move from one audit to another audit. And that documentation is not focused. So I think that is some very, very fundamental aspect of, how do we document this, number one. Number two is how do we identify the risk of material misstatement? And there is the standard SA 315 identifying. And because, if there is a risk of material misstatement, it is the risk for the company, it is risk for those charged with governance, it is risk for management, it is risk for us. If we are able to execute that well, I think major portion of the risk, I'm not saying 100%, but major portion of the risk gets addressed.
Yes, sir. Sir, in the same case, in the government bodies, we often come across situation where responsibility is not clearly mentioned in sometimes, and the person dealing with the auditor is only a subordinate officer or junior level officer who represents that he is not having authority to clarify or confirm his views. So, where the audit committee stands in that particular case, what are the remedies and what to be done in that particular, what is to be done in that case?
I think we should go to the appointing authorities. Here it will be CAG. So somewhere, we need to move up the value reporting as to this subordinate reports to whom. And from there, we'll have to, and then that person reports to whom. So I think this will one has to evaluate. Because those charged with governance don't take the responsibility, then how do we take our responsibility? It's not only accountant. As I said, a lot of times we focus only with accountant and we don't have interactions. The accountant is not the one who is responsible for the strategic directions, governance, and accountability. Accountant is an executive. So somebody who is there, I think we should try to identify, move up from his reporting and communicate that this is our information, what we want, and how do you address. And somebody is there in that. I think we don't pay. As I said, a lot of times, I have quite a few friends. Let me share with you who get their accounts audited, and they say that at a senior level nobody comes and talks to us.
Sir, one last question. Is communication of independence by auditor mandatory for audit of all companies or only to the listed companies?
It is coming from the standard, but it is primarily that communication goes to the listed companies. See, in case of unlisted, correct, if it is PI, we should be mindful because PI means there could be some coming in. But even for non-PI, the file comes up for review, and our opinion could be challenged. Even by the stakeholders, even by tomorrow what happens we do not know in case of all this uncertainty. So hence, if there are any engagements which we are taken, lot of times it is for us to document and it's communication. There is no formal communication, but for us to document that we have taken this non-audit engagement, and this is how we are going to. We have concluded that we are independent. That's a documentation is must.
Yes. So thank you so much, sir, for your wonderful deliberation. It was really nice to have you at this platform of Zoom platform, and continuously you have spoken continuously for 2 hours, one-way communication. But members have also raised their queries, and all the queries were solved. And still at this daytime, around 1,400 members are still live. Wow. 1385 members are still live and raising their queries. This is just a moment. I have taken this information. Around 1385 members are still live. So once again, on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant, I extend my heartiest thanks towards you, sir, for sparing your valuable time and enlighten all the intricacies relating to both these standards. Thank you so much, sir. Thank you so much.
Thank you, sir.
I
would be happy